Senior economist Joe Willis and Seventh Capital Managing Principal Monica Mehta. Monica is the author of the new book, The Entrepreneurial Instinct, and it's a pleasure to have you here on Rewind. Thanks for joining us.
Great to be here.
Joe, always great to see you. If for no other reason than that it means it's Friday. Yeah. Let's kick it off with a look at trading here. Big rallies across all three major U.S. indexes. The S&P rising to its highest level since May. And this after payrolls climbed more than forecast, getting a boost from a pickup in employment at automakers. Still, the jobless rate unexpectedly rose to a 5-month high, 8.3%. And many market watchers say we have a long way to go. Here's Diane Swank of Mezro Financial.
We're digging ourselves out of a hole, but the hole's still deep. And I think that's what the reality is. And the reality is also, turning something that's cyclical. And this happens, unfortunately, in the wake of financial crises. We didn't do everything right. And I wish that, Congress wasn't so impotent today in a lot of ways.
For a closer look at July's unemployment figures, let's hear from PIMCO CEO Mohamed El-Arian. He spoke with In the Loop anchor Betty Liu.
The good news, and we should welcome it because we haven't had it for a while, is that the number beat at the headline level. So the 163,000 jobs created are a solid number, and we should welcome that. In addition, long-term unemployment went down from 5.4 to 5.2 million. So that's good news. However, when you look at the details, a few things come out. The most comprehensive measure of employment is the participation rate and the employed to population rate. Both of those came down. And then when you look at the composition of the jobs, those who are struggling continue to struggle. You think of teenage unemployment going up. You think as well as unemployment among those with less than high school diplomas. So it's a mixed picture. What it tells you is the economy is healing, but healing gradually. And we need to resist these winds that are coming from the fiscal cliff and from Europe. I mean, this is a muddling number. It's not strong enough to suggest that the economy is going to take off. Against that, it's not weak enough to confirm that the Fed is going to come in. Our gut feeling is you will get a signal from the Fed at the end of August at Jackson Hole. You will probably get action in September. But it's not going to be sufficient because the Fed doesn't have the tools to deal with the underlying problems. The good news, Betty, is that the U.S. is healing. The bad news is that Europe continues to bleed. Every day, oxygen gets sucked out of Europe because private capital is exiting. So it's critical to stabilize Europe in order to allow the U.S. to continue to heal.
Let's hear from Monica Mehta and Joe Willis. Monica, what do you think about, he thinks we're going to get action in September, but that it won't be enough simply because the Fed doesn't have the right tools.
Yeah, I think what you're seeing here is a market that is used to a D student that's finally getting a C, and now we're getting really excited about numbers that are a little bit better, but really not good enough for how far into this, weakening economy that we're in now. It's been years, it's been trillions of dollars of stimulus, and this isn't nearly enough for the 5.2 million people who are still looking for work today.
Right, but do we get more stimulus from the Fed?
It looks like, there are indications, or at least the market seems to think that there's a possibility of this. You saw a rise today. I don't think it's because of the 163,000 jobs. I think it's because people are placing bets that something positive is coming down the road.
Joe, what do you think? I was talking with Kenny about this last night, and I said, hey, if we get 160,000 jobs, we're going to be over the moon, and we won't even care that it means there's a less likelihood we get help from the Fed. Is there less likelihood we get help from the Fed?
Well, I think the first thing is when you look at the totality of the jobs report, it's what Shakespeare said, it's sound and fury that signifies nothing. That it's a lot of noise in the report, there were a lot of special one-time factors, and it wasn't weak enough to guarantee a response from the Fed in September. I think the economy, the growth path of the economy is weak enough.
It's 163,000 jobs, though. Isn't that good?
It wasn't enough to stabilize the unemployment rate, Matt. Moreover, when you take a look at the employment to population ratio...
They're two different surveys, right? I mean, maybe more people are looking for jobs, so...
The Fed's not worried on the month-to-month variation. They're looking at the much longer picture. Problems with labor market, slack in the labor market. It actually got worse on the month. These are the things that the Fed's looking at over the long term. I think that given the problems in the labor market, given the slow growth path, the Fed will likely move, although I really don't support that. I don't think we're going to get much. I'm just not sure it's going to be at September, and it's much more complex in terms of what they're going to do. Too many investors are placing bets that they're just going to get a repeat of the first and second rounds of large-scale asset purchases, when it may look far different.
Don't you think investors have already kind of priced in a QE3 of some sort?
I think the markets are very volatile and they can't make up their mind where they stand. One day they're down, one day they're up, and today they think, hey, there's a possibility of more action, and I think that's why you saw such a gain today. But as Joe mentioned, I'm not sure that QE3, QE4, QE5, it doesn't matter. It's not going to fix the patient's underlying problem. It's just medication to get us through a little bit longer, but it's not fixing the underlying problem.
All right, it's a very good point also about the volatility. We tend to think that the markets can predict everything perfectly, and maybe the markets just don't know what they're talking about. We never think about that option.